Welcome back, family. And today's episode, we're going to be discussing how to perform technical analysis for beginners, part one. Many beginners who are starting technical analysis may believe that it can be very difficult and hard to understand. However, like many things, with great practice comes great improvement. So, with that being said, let's kick it off. Before you on the screen, you can see the average price action for Tesla over a 5-year period. So, before I start diving into Tesla's trends, patterns, and formations, let's talk about the platform that I'm using. So I'm using TradingView, which is an exceptional platform for people who are just starting to trade or just starting to understand stocks and the way they move, right? So let's describe the kind of chart that I'm looking at right now. Right now, I'm looking at a candle chart, and many other people, they can decide to look at a bar chart or a mountain or line chart. It's whatever really is your preference. And for me, it's a candle chart. So diving into particulars, like I said before, this is a 5-year chart of Tesla. Each candlestick symbolizes a week during that 5-year period of how Tesla traded, and the blue lines are certain lines or certain levels of resistance and support that I have marked off. But we'll dive into that first. Let's keep the first thing first and keep everything simple for you to understand. So whenever you're analyzing charts, you want to look for trends, patterns, and formations, right? So first of all, a trend. What is a trend, right? A trend lets you know the direction in which the stock is moving, if it's moving up or if it's moving down. You have primary trends, you have secondary trends, and you have minor trends. So looking at Tesla's 5-year chart, let's draw a primary trend. So from March 20 is when if you know anything about what happened during this time period, this is when they first announced the COVID restrictions. So a lot of people were panicking, thinking the world was over. The world was over, excuse me. So on March 20, Tesla hit a low of $28, $29, depending on if you round up or down. So if I draw this trend from that point on, all the way up until November of 2021, Tesla experienced a primary trend, a primary uptrend, meaning that the price action from that particular standpoint moved upward instead of downward, right? So it experienced a primary uptrend. However, during this primary uptrend, you also saw a secondary trend of the price moving downward. But overall, you still saw a primary trend of it moving upward. Then you saw the secondary trend of it moving downward. And then in between, you also have minor trends. Example of a minor trend would be something like this, where Tesla's price action actually moved down while also moving up. So you have your primary trend, your secondary trend, and your minor trend. So your primary trend is over a significant period of time. So like I said, from March 20th, from March 2020 all the way until November 1st, 2021, you saw the primary trend of Tesla moving upward. And then from January 25th, 2021 to June 1st of 2021, you saw that Tesla started to move in a secondary downward trend. And then you also have a minor trend, which is a shorter time period when compared to the second and primary trend. So you saw this trend only lasted what, about 4 or 5 weeks until it started to reverse and move up again, according to the primary trend, right? So now that we got the trends out the way, let's dive into what each of the candlestick bar means. So first and foremost, if the candlestick bar is green, that essentially means that throughout the trading day, it moved higher than the opening and closed higher, right? If a trading day, if a candlestick bar is red, that means throughout the trading day, it opened higher than what it closed. So when I say closed and open, so let's take a look at this week of Tesla, right? So this will be the open for the week. at 137, and currently the close or where it's trading at is 175, right? And then if we look at the Reds candlestick, this will be the open for that particular week of December 19th, and this will be the close for that Friday, December 24th. So let's talk about how do you establish an uptrend and how do you establish a downtrend, right? So let's get some of these arrows out the way so that way it's not confusing and cluttered for you. So first and foremost, we interpret an uptrend by higher highs and higher lows. So what does that mean? So going back to the primary trend, you can see from March 2020 all the way until November 2021 that Tesla experienced higher highs, higher lows, higher highs, higher lows, and ultimately their primary trend was upward, like stated before. And then if we go back to the secondary trend, right, you can see that Tesla made lower highs, lower lows, right? This pattern continued until it started to reverse out around here. So lower highs, lower lows, lower highs, lower lows, right? And then going back to the minor trend, you can also see that when it started to spiral down a little bit for about, say, 6 or 7 weeks, it also made lower highs, lower lows, lower highs, lower lows. So whenever you have a higher high, higher low outlook, that's a bullish outlook. That means that the stock is advancing, and the buyers who bought low are making an extreme amount of profit at the top if it advances a lot, like how Tesla did over the pandemic, right? And if you're seeing lower highs and lower lows, that means that's a bearish outlook or a downward trend, like said before. So if it's a bearish outlook, that could be a good time for you to sell. Since you bought low, you will want to sell high. So that way you can reach some of the profits. So here, like we identified, you can see a primary trend here of Tesla increasing its stock price going up and it being an upward trend, right? So a bullish outlook. And then right around November 21st, right around November 2021, Tesla actually went into a bearish outlook because of how overpriced the stock was or overvalued. So between November 2021 all the way to December 2022, Tesla stock fell more than 50%. Let's dive into how I predict when to buy, hold, or sell, right? So whenever I do this, I like to use indicators that help me. And one of the indicators that I really like to use is the 20, 50, and 200 EMA daily, right? So what is the difference between the 20, 50, 200 EMA and the 20, 50, 200 SMA? Well, essentially, the SMA takes an average of the data over that 20, 50, or 200-day period, whereas the EMA weights more heavily the current price actions or prices that are coming in rather than the older ones. So the EMA is a very good tool for predicting what's going to happen in the near-term future. So that's why I like to use the EMA to predict when to buy, hold, or sell. So looking at this, let's go. So the red line that you see, that is the 20-day EMA. The green line that you see, that is the 50-day EMA. And the blue line that you see, that is the 200-day EMA. So typically when a stock trades above its 20 and 50-day EMA, you can see an advance and you see the stock starts to move. As you can see here in March, when it hit a low of $29 and hit its 200-day EMA line, it quickly bounced off its 200 EMA line and began to trade subsequently higher and over its 20 and 50-day EMA line. And this trend continued and continued and continued, and then did the same thing when it went from it. If you remember earlier, this was the secondary trend. When it went down and started to have a downward trend in a bearish outlook, it touched this 200-day EMA line again and then bounced right back off of it and kept trending up. However, all good things come to an end. So when you see a significant time period of an uptrend, it can be definitely followed by a significant period of a downtrend, right? Which is the case with Tesla. So once it hit about a high of 400, a little over $400, it began to sink back down. Its price actually began to fall over the next year. And as it began to fall, you can see that it actually fell below its 200-day EMA line. And for guys like me, whenever I see a stock trading around its 200-day EMA line, that means it's at a good value, or it's approaching a value that I want to buy in and begin accumulating. So each time, if you go back here, when it hit its 200-day EMA line in March 16th of 2020, that was a great time to get into Tesla and hold. And then I would have held all the way until here, where I saw that it was approaching or going below its 200-day EMA line. I would have started saying, okay, I think it might be time to sell the stock, right? But patience is key. You have to wait and see. So in this case, I waited and saw, and then it kept bouncing up. So I kept holding longer. But here's where we get into some of the signals of when you want to sell. So once Tesla hit that 400 peak, right, as far as this price opening or price high, hit a price high of 400 and some change, right, you can see that it started to trade sideways. You started to see a double peak where the secondary peak couldn't go above the first peak. And then you see it again here where the secondary peak couldn't go above the first peak. So it began to trade sideways here, here, and here. And usually when a stock starts to trade sideways and its secondary peak can't advance past the first peak, that's a bearish signal, meaning that the stock is going to start to trade in a downward turn. And that is very evident in for Tesla price action and price movement over the last year before us, right? So once I saw this, I said, then you want to go back and you want to start marking off some of the support and resistance levels. So what are support and resistance levels? A support level is when a stock can't go below that certain level. So which is why it's called support. So if you have a stock like this, right here, you see Tesla in this particular price action, it started to move up and then it moved down, but it never went below this level twice. It never went below. It hit this level twice and bounced right back off of it. So this level was about $180 around that mark. It hit it twice and then bounced off of it. Right here, when you see Tesla's making this advance, it hit a resistance level. So a resistance level is when the price is moving up and it's advancing, it hits a certain price high, boom, and then it comes back down. That's the resistance level. So here you can see that Tesla hit a resistance level of 300 some odd dollars, 298, whatever you want to call it. And it bounced off, came back down, hit a support level. And then as Tesla started to move, this is the key where you want to watch. Is it going to break its resistance level or is it going to move back down? So if Tesla would have moved back down, that would have been Tesla trading sideways, hitting a double peak, meaning that there would have been a bearish outlook. Instead, it didn't do that. Tesla broke past its resistance level, kept moving upward, and hit another resistance level. And then its old resistance level became its new support level. And then the new resistance level became obviously the new resistance level. So, and you see that here. So then boom, now I'm looking at Tesla again, looking at it one more time. We're like, all right, hit a new resistance level of $400 or 400 some change, 408, whatever. Hit a new resistance level of 416, 415. Then traded down again, tried to break his peak once more, couldn't do it. The next high I was able to achieve was 402. So that's the first signal right there that is struggling buying. It's struggling meeting. It's struggling moving past its resistance level. So why is it struggling moving past its resistance level? This is where the difference between a green and red candlesticks come into play. So you can see here that here the buyers had all of the momentum. They kept buying, kept buying, kept buying, kept buying, right? However, at one point, it changed and it swung, and the sellers had all the momentum. So now the sellers are selling the stock off. So you can see, even though it's little, down here is the volume of the price. So this tells you how many people, buyers and sellers, are in the market, right? So you can see around this point, the volume started to increase. Yeah, it wasn't a significant increase like how it was here when it hit its bottom and during the pandemic, but it's still an increase nevertheless, right? So that's a first signal that, okay, the sellers, excuse me, are starting to take back the power. And you can see there's more and more red as we go along, meaning that the sellers during this volume day where they're experiencing more volume than they were before over a 2-month stretch, that the sellers are starting to win back the market and they're starting to sell significantly because at this point in time, Tesla was over evaluated. They wanted to reap the profits that they had made from purchasing at a lower level because they bought low and sold high. So they most likely either bought at this level or at this level, and now they're selling at the high of this level, right? So you can see this trend continue. You know, they're selling, selling, selling. More red candles, more red candles, more red candles. And then now you're getting into Tesla begins to start moving below its 50 and 20 EMA line, which is a bearish outlook, meaning that it can possibly move below its 200-day EMA line. And it did, not all the time, but it can. We're starting to move below its 20 and 50 EMA line. It moved below slightly its 200-day EMA line, but then bounced right back up. Whereas here, it moved below significantly, bounced up, and then moved below significantly again because it was in a downward trend. A great sign of me wanting to buy a company is when it starts to move below its 200-day moving average. And once a company moves below its 200-day EMA line, it's harder for it to bounce back up. And you can see that evident here, where it took probably a month, maybe a month and a half before Tesla was able to go above its 200-day EMA line again, and then it fell right back below its 200-day EMA line. And now, right now, it's at one point it was below its 20, 50, and 200-day EMA line for a significant period of time. And that's really signaling to me that the buyers are leaving the market and the sellers are coming into the market and they're selling, selling, selling while the buyers are leaving the market. They're not buying yet. So an experienced investor would see Tesla hit its double peak and it started to move below its 200-day EMA line. That would have signaled to me I would have sold here and I would have just held my money and I would have waited until Tesla started to bottom out once more. So how do you know when Tesla is going to hit a bottom, right? That's when you go off, like we were saying before, and when you're marking your resistance and your support levels, you refer back to the levels that you marked in the past years. A resistance level that you marked off 3 years ago can very well be a support level that you're going to encounter 3 years into the future, right? So if you look here, this is level of 100 here became a new support level here, like I said before, right? So once I saw that, I said, this is a great time to get invested into the market because it hit 100 and it bounced off. Another indicator that let me see that, okay, a reversal is in progress was that what we call the hammer. So whenever you see a hammer at the bottom of whenever you see this type of formation happen with the candlestick, we call it a hammer because it kind of looks like a hammer at the bottom of a descent. That's a great sign that a reversal is in order. So then I started to look for signs that confirm whether or not if a reversal pattern is in order. And as you can see, once it hit the bottom, the buyers started to take back the market, and people and the smart and experienced investors began to accumulate once it hit a price target of 100, because they knew it wasn't going to stay at that price target for very long. And if it did, then they would look for another bottom and sell. But eventually, the market always moves in cycles, right? So they knew that even if they got in at $100, and let's say it sunk again to 70, they will buy. They would never invest all their capital in that $100 mark. They'll probably invest 50% of their capital in that $100 mark. And then if it fell some more, they'll probably invest another 25% of their capital in that 60 or 80 mark. But the market always moves in cycles. So they knew eventually that Tesla was going to turn up. Especially it's Elon Musk is behind the stock. It's a fairly recent stock. I believe it IPO'd about 10 years ago, maybe around that time. So it still has a lot of firepower. Elon is a disruptor. Uh, a lot of people consider him, the modern day Tony Stark, whatever. So all these, and they saw that Tesla, basically as a buyer, you're saying, okay, Tesla is still makes up more than 60% of the EV market share, right? So they still have a dominance in that factor. So obviously they're going to trend back up. What they're experiencing right now is just headwinds, which is why you want to pay attention to the news and look at the chart at the same time, because a lot of times the news can reflect the chart. Like during this time period, everywhere Tesla was sinking down, everything was happening with Twitter. A lot of people were saying that, oh, Elon's too invested in Twitter, blah blah blah. And there was a serious stock sell off too as well. So this had a lot of investors concerned. But like I said, all the experienced investors knew is that, okay, cool, I can sell high and just buy back the same asset for a lower valuation, which is perfect. Is what you want to do whenever you're performing technical analysis or whenever you're trading stocks, period, or even investing in stocks, period. When you're a trader, whether you're a trader or an investor, it's important to understand technical analysis, because a resistance level can very well become a support level, and it helps you identify trends, patterns, and formations that can predict future price action or future price movement. So that's just a little taste of what technical analysis is. It's not that hard. It's fairly simple. It's fairly easy. You just have to make it into practice of make it a habit of constantly looking at charts, drawing your support levels, drawing your price channels, identifying patterns, identifying trends, and then ultimately over time it'll become easy as 1, 2, 3, with you predicting prices and being able to come up with your own price range or price targets or price points that you want to enter the market and buy. A great trader and investor once told me that you don't have to trade every day. Instead, you want to build up your capital and deploy it at key strategic times in the market, so that way you can increase the amount of return that you have on your capital or money. So I hope you enjoyed this video and continue to enjoy many others like this. Like I said, this is part 1, so expect more renditions and other versions to come out in the future to help you better yourself and better your family and hopefully create generational wealth. As again, thank you. Don't forget to hit the like and subscribe button and to tune in for more. And as always, have a nice day.